Top 10 companies that will increase dividends in 2026. They say dividends are the paycheck of the wealthy. While most people chase hot stocks or quick flips, the richest investors quietly cash in bigger and bigger checks every single year. And here's the truth. 2026 is shaping up to be a massive year for dividend growth. Some of the world's strongest companies are about to raise their payouts. And if you're holding these stocks, that means more money in your pocket without lifting a finger. So stay with me, because today we're counting down the top 10 companies that will increase dividends in 2026. And number 1 on this list could change your financial future. Number 10, public storage. When you think of wealth, you probably imagine flashy offices, booming tech stocks, or luxury brands. But here's a surprising truth. Some of the richest investors make money from something as ordinary as self-storage. Public storage is a giant in this field, with over 170 million square feet of rentable space. These storage units may look simple, but they're steady, recession-proof moneymakers. Over the last 5 years, public storage has grown its dividend by almost 9% annually, proving that this is not just about storing boxes. It's about storing wealth. As cities get more crowded, apartments shrink, and people keep buying more stuff, the demand for storage will only climb. And that means investors holding public storage shares in 2026 could see another strong dividend increase, even while many other real estate sectors struggle. The orange doors you see along highways aren't just doors. They're gateways to steady cash flow for patient shareholders. Number 9, Eversource Energy. If public storage shows us how the ordinary can be profitable, Eversource Energy proves how boring can make you rich. This New England utility has been paying investors more for 25 straight years, turning steady electricity bills into steady shareholder income. Right now, it offers a reliable yield, and its dividend has been growing around 6% annually. The real magic with utilities like Eversource is that they operate under a regulated model. That means their profits are backed by state approval, making their cash flow almost guaranteed. As the company modernizes its grids and invests heavily in renewable energy, 2026 is likely to bring another dividend increase. In a market full of unpredictable swings, Eversource is the calm in the storm, a reminder that stability can be just as powerful as excitement when it comes to building wealth. Number 8, FactSet Research Systems. Now let's step behind the curtain of Wall Street itself. Every big financial institution, banks, hedge funds, and asset managers needs data to make decisions. That's where FactSet comes in. This company sells subscriptions to its analytics platforms, and those subscriptions create a constant stream of revenue. FactSet has already raised its dividend for over 25 years, and with a low payout ratio, there's plenty of room for growth. By 2026, as the financial world becomes even more data-driven, FactSet will be in a stronger position than ever. For investors, that means more profits, and with those profits comes another dividend raise. It may not have the flash of a Silicon Valley tech firm, but FactSet is a quiet powerhouse, one that steadily puts more money in your pocket year after year. Number 7, NextEra Energy. NextEra Energy is not your typical utility. It's a forward-looking empire that runs Florida Power and Light while also being the largest producer of wind and solar energy in the world. With 29 consecutive years of dividend increases and a growth rate of around 10% annually, NextEra has shown that utilities don't have to be slow-moving. As the push for clean energy continues and governments pump billions into renewable infrastructure, NextEra is perfectly positioned to benefit. By 2026, investors should expect yet another increase, fueled by both traditional utility profits and booming demand for renewable power. This is the stock that bridges the old world and the new, steady like a utility, but growing like a tech stock. Number 6, Chubb Limited. Insurance may not be exciting, but it's one of the most reliable businesses in the world. Chubb Limited is proof of that. With over 30 years of consecutive dividend increases, Chubb quietly rewards shareholders while sitting on mountains of cash. Rising interest rates have only made it more profitable, since insurers earn more on their reserves. By 2026, if catastrophe losses remain manageable, Chubb is set to continue its streak of increases. It's the type of stock that doesn't make headlines, but its reliability is exactly what investors crave. While others chase high-risk trades, Chubb investors sleep easy, knowing their income keeps climbing no matter what the markets are doing. Number 5, American Water Works. Water is the most essential resource on the planet, and American Water Works controls one of the most recession-proof businesses in existence. Since 2008, it has raised its dividend every single year, and in 2025 it delivered another 8% increase. Its long-term goal is 7 to 9% growth annually, which means 2026 is almost guaranteed to bring another raise. The truth is simple. People can skip vacations, delay buying cars, or stop shopping for luxuries. But nobody skips the water bill. With U.S. infrastructure spending rising and demand for clean water only increasing, American Water Works is positioned as one of the safest and most reliable dividend growers heading into 2026. Number 4. Fastenal. From construction sites to factories, Fastenal supplies the nuts, bolts, and tools that keep industries running. It may not sound glamorous, but this company is a dividend machine. For more than 25 years, Fastenal has raised its payout, and in the last 5 years, those increases have averaged 12% annually. With the economy bouncing back and demand for industrial supplies rising, Fastenal's profits are strong and growing. That means more money to return to shareholders in 2026. While everyone else is distracted by the next big trend, Fastenal proves that even old-school hardware can quietly build fortunes for patient investors. Number 3. General Dynamics. National defense isn't just about security, it's about consistent, long-term contracts worth billions. General Dynamics, one of the largest defense contractors in the world, has raised dividends for more than 30 years. With a backlog of orders for submarines, tanks, and cybersecurity systems, this company has revenue locked in for years to come. As global tensions rise, defense spending is only going higher, and that means even more guaranteed cash flow. In 2026, General Dynamics is expected to deliver another raise, continuing its tradition of rewarding investors while the world relies on its technology. When governments spend billions to protect themselves, shareholders reap the benefits through steady dividend growth. Number 2. Church & Dwight. You may not know the name Church & Dwight, but you know its products: Arm & Hammer baking soda, OxyClean, Trojan, and countless other household essentials. These are items people buy in good times and bad, making this company a fortress of stability. For 27 years straight, Church & Dwight has increased its dividend, and over the past decade, those increases have averaged 11% annually. By 2026, analysts expect another strong raise, powered by steady consumer demand. Essentials don't go out of style, and for investors, that means dividends that keep rising no matter what the economy looks like. Number 1. Pfizer. At the very top of this list is Pfizer, a company that has faced highs and lows but continues to reward shareholders. After its pandemic windfall, Pfizer went through a slump, but now it's rebuilding. It's paying down debt, focusing on high-margin areas like oncology, and streamlining its operations. Today, Pfizer's dividend yield sits at an eye-popping 7%, and it has raised its dividend for more than 15 consecutive years. By 2026, Pfizer's new drug pipeline and stronger earnings are expected to put it in an excellent position for another generous increase. Management will want to signal confidence, and nothing does that better than raising the payout. For dividend investors, Pfizer may be the single most rewarding raise of the year, proving that patience pays. The truth is simple: most people chase hype, but the wealthy understand the magic of dividends. Each raise is not just a number, it's a sign of strength, a sign of confidence, and most importantly, a raise for you, the investor. If this video opened your eyes, don't let it end here. Hit that like button, share this with someone who dreams of financial freedom, and subscribe for more strategies that quietly put money in your pocket year after year. Because in 2026, dividends won't just be headlines, they'll be paychecks for the investors who were smart enough to prepare today.